at this area here, you do see the momentum, the speed in which the market did approach this area here. So you say, okay, means while we got into this area with a high degree of momentum, that means that we had a strong push into this area here. So you're still looking for a further continuation of the rally, meaning that you're still expecting the market to continue pushing to the upside to such an extent that we will create a new high. Are we okay with that? So if you are looking for that, the creation of a new high, mind you, at the very same light, you are taking into account the probability of a reduction being there within the market, right? So this is the first instance we do see that. So now the question is that, like, based on the momentum in which we push to the upside, right? And during that process, when we were pushing to the upside, what was occurring? What occurred in that process, right? So the other thing that you would see is that, like, this is the initial, let's say maybe we start here, we say this is the initial level that the market did break out of. And this is the second one. And this is the third one, right? And this is the fourth one, right? Are we okay with that? So throughout this push to the upside, each and every level that gets broken, we're looking at it in terms of highs, right? Each and every high that gets broken, the probability of shorting reduces. Are we okay with that? Like, you have the probability of people considering taking short position reduces. As price continues to break each and every swing high, what occurs is that the probability of shorting reduces and the probability of buying increases. Are we okay with that? An increase in the probability of buying means that, like, now we're going to have more people considering taking those long positions. So as price continues to increase, now the question is that, can this area here be broken? Are we okay? Because at the end of the day, you want to see, this is, you're looking for a probable break above this area in order for the market to form a new high. Are we okay with that? So if we are looking for the formation of a new high, meaning that, like, the probability reduces as price breaks above every swing low. Is everyone fine with that? I think this is simple, right? So now, let's say that you are in a position where you actually took long positions, and at each and every swing, I can say each and every retracement that was occurring, you were scaling in, right? You were scaling in and price continues to push to the upside, right? Upon breaking above this area here, what occurred is that we had formed a consolidative state. So the consolidative state, remember again, it's the same as the Schrodinger's experiment. It's neither bullish nor bearish, but its location does provide a bit of an insight. Oh, if the market does consolidate above this specific area, the probability of it continuing to increase, now it's there. Are we okay? So if the probability of price continuing to rally, it's there. Now, as price continues to, we're having a retracement now. Now the question is that, like, how deep will this retracement be? Right? Because the probability of us considering taking long positions, let's go on a daily time frame. So initially, the probability of us looking for, right, at this level here, upon this area, when it was initially liquidated, right, we did consider long position. I think it was somewhere around here. We did take long position somewhere around this area here, pushing price to the upside, right? And in that period, remember, again, why did we actually consider taking long positions at this area here? The reason why we considered taking long position at this area here, again, it is more to do with how the market did approach this area here. Once the market approaches a specific area with a high degree of momentum, breaking below that level there, it will take a specific amount of time. Because as the market comes into a specific area, like, for example, the support level, what will occur is that you will have more people considering taking buy. Again, the stigma when it comes to this is based on the highs that were broken as the market was pushing to the upside. So meaning that, like, as each and every high, when it's being broken, it means that the probability of shorting decreases and the probability of buying increases. So that's why, like, you would consider taking long positions here, right? Then price, as it pushes to the upside, now you want to look at this area here. right? So as price continues to push to the upside, you're going to look at this area here. Now, price as it pushes to the upside, if it lacks the strength to continue breaking that high, meaning that the probability of these positions that you have, the chances of them not working out now starts increasing. If you are in like long positions, meaning that the probability that you're going to get taken out of that position starts to increase. So your main objective, it's either you hedge against this position or you take profit on this position and just kind of like let the remaining one, either the market takes you out or you close that positions entirely. But the problem is that like when you close that position entirely, what if the market comes and then does not even go as deep as this level and continue pushing to the upside? Let's see, Sean, with the decline of shorting probabilities with the break of new highs, I can assume probability of late bias will increase, which might give us a deeper retracement. Yeah. So that does, yeah, I do agree with you, right? So now once we break below this swing low, what do you think will occur in most cases once we break below this swing low? And again, that's the other thing. Remember that like each and every time when we're looking at this, we say, oh, okay, we want to take long positions on this, right? What I want you guys to look at is that like you have to look at the dollar. There is nothing that we can do. That's why like I always talk about the dollar most of the time. There is nothing that we can do without consulting with the dollar. Like there's legitimately nothing that one can do without consulting the dollar. You have to look at the dollar, how it's moving, how it's behaving. Are we okay with that? Because like if you going to take long positions on this and then you're not considering the fact that the dollar strength in a very, very, how can I put it? That's precarious situation. I think so. You know, my English is Englishing, man. Yeah. So we are in a sticky situation. The thing is that like, regardless of however you want to pose it, that's the thing. Regardless of however you want to pose it, however you want to look at it, right? So I don't know how many of you guys are actually exposed to like what other companies are like performance of companies like Lauren Lynch and all these things, position, like their assets, how they are, right? Are you guys exposed to that? If you can look at it, majority, not majority, all are in a negative. They lost like a lot of money like this year. Have you guys seen that? So the thing is that like, okay, it always goes back, right? It always goes back. It always goes back to it always goes back to 2020. Everything always goes back to 2020. And when it goes back to 2020, it's not entirely focused on other nations. It's focused specifically on the most dominating currency when it comes to exchanges, which is the dollar. And people do not actually realize that the Feds themselves, they are not actually part of the US. They though they are in, but they are not. It's not it's not the same as us having in South Africa. What do we have? What do you call that bank? Reserve Bank. It's not us like having Reserve Bank, even though they use that bank as Reserve Bank, but it's not them. It's a separate entity that loans money to the United States. And again, we're looking at this thing, right? We're looking at it and say, oh, okay, that is the case. So the amount of debt that they have created in 2020, it starts to affect us because that's the mode of exchange. If the mode of exchange is suffering, if the currency itself that is used for transactions, everything, it's behaving somehow, it affects the global economy as a whole. You understand what I mean? Everything is affected by it. That's why now you start seeing most countries, they want to exchange using different currencies aside from the dollar. And all these things, they do affect us. So what they do, right? Are we okay with that?